Good morning. Good morning, everybody. How are y'all doing? Good morning, Shadow, Chris. Hope you got everything set up today, Chris. Max, Benton, Corey, Enrico, Mary. No, I played with it a little bit yesterday. I have it hooked up, the new camera, but I don't have the settings right, and so I was having a little bit of trouble. I'm gonna have to get it going. But by Thursday, because I'm not trading tomorrow, so by Thursday, oh look, I'm already looking at the camera because the camera's over here, the new camera, and this camera obviously is in front of me. So I'm already kind of looking over here on accident. But yeah, by Thursday, I'll have that thing ready. Morning, David. Morning, Tyler. Let's see. So I'm, for the moment, looking at here. Let's go through it real quick. Hold on one second. Let me make sure. Let's get this opening range gap here. We had close. That's going to be our high. Here's the open. It's going to be our low. And here's our midpoint, which is 069. Right there. All right. There we go. Let me check something here. I'm still on the December contracts, by the way. We had 8:30 news. We have no more news coming out. The reason why I'm still on the December contracts is because the open interest is still larger. You have, yes, volume switched over. However, open interest is still higher on the December contract. So I'm like 99% sure Thursday I'll be rolled over. So I wanted to see what that open interest looked like after the open. And it stayed. So yeah, staying on the old contracts. Okay. Opening bar, we have this volume imbalance, which we traded right back up through. Let's start on the daily chart. As always, daily chart, not much has changed. Right now, we do have this. So we have this swing right here, right? Because it's a swing that's the highest point between swing high. That high is lower, that high is lower. So we have the swing high. And then we have this bar yesterday take that swing high. Well, we had this one take it. But with this one taking that, continuing up and potentially today opening and potentially leaving a fair value gap here, if price closes today above the high of this, which is 908. So as long as we close above 908, we'll have a fair value gap. So that will technically be some, continuing. That'll be a signal that it'll continue being bullish. So even if we close down, have a down bar today, and we leave a fair value gap, I would expect price throughout, like I've been saying, throughout the rest of the year to continue up. So we'll see. Right now we did have our open, and we did go up. So we opened, we went higher. Now we're going low. So we'll see what happens today. But not much really has changed on the daily. Drop down to the 15. So I kind of framed out the 15 a little bit. I have clear buy side liquidity up here. 15-minute fair value gap. London high is up there. And then to the downside, we traded through this low here. Okay. Which is there. We had a bit of a imbalance right here. Price traded right back up through that imbalance. Now it's continuing down. So I want to see if this right here, which we have 10 minutes, if we create a fair value gap right here. If we do, then we'll be bearish on the 15-minute chart here, which technically, as we came down, we do have this fair value gap, which traded up into. So it's pretty bearish for the moment on the 15-minute, not for the daily. So I'll see if we get this fair value gap. But what I'm thinking could happen is we could reach down right back into this area or last week's high and then come up to buy side liquidity. I don't think we're going to come back to the sell side liquidity here that I've been having for the last few days that I've really liked that area. So especially if I measure out this range from here to here, look what's right here. Equilibrium right above this 15-minute fair value gap. So I could definitely see price trading right into this area, maybe even reaching a little further down, and then coming up to this buy side liquidity. That's kind of what I'm anticipating today. So we'll see if that plays out at all. And then I'll drop down to my 1 minute. And we have this volume imbalance, which we did trade into it. Let's see how that holds up. Right there. Even though we tapped it, I want to see how price continues to respond to it. Here we go, my mic. My mic was adjusted weird. The arm, I guess somebody moved it. And the arm, I couldn't fit my actual arm underneath it to type or get my keyboard. What site are you looking at? Barchart.com. Barchart.com. Hey, Ed. So look, volume imbalance is holding up. Right now we have, this is our opening bar fair value gap. So this is the one, I'm just going to mark it as a visual, but I'm really not, this one may not mean much to me. Might not mean much to me. As I've said, the opening bar fair value gaps, I take it as a kind of 50-50 that it could be traded back through again. So we'll see. And then if I look, see on the 5 minute, there's some nice, where this volume imbalance is, there's some decent buy side liquidity here that we may attack before reaching up to this buy side liquidity if we do end up going up. Let me go to the 1 hour and see what it looks like. Oh yeah, 1 hour, relatively, smooth up here. I'm very confident we're going up. We'll see if it happens during this session, during my trading session, but yeah, just waiting for price to reach down, reach somewhere, and then come back. Like I said, right here, right around this area is equilibrium, and I never expect price just to stop in the middle of nowhere, like ever. So if I measure out this range, I like right here where price is stopping, there's no reason for price just to stop right here. Like it should come down to equilibrium or this fair value gap. Now, if it does just kind of stop there, then I got to figure out why. I got to look at other time frames. What's going on? Why is it just stopping there? Oh, interesting. If I look left on this 5 minute chart, bring this fair value gap out. Oh, nice. So anytime price just stops, just look left. Find a time frame, look left. If on the 5 minute, if we were too far away and I can't see anything left, then I go to a higher time frame, 15 minute. If I don't see anything to the left, okay, higher time frame, 1 hour. Looking left. Oh, there's a fair value gap right there. Look at that. So there's always going to be something. You can look at the 4 hour. 4 hour, this is a big fair value gap that's here, but we're already kind of deep into it. But yeah, just always look. Just look for what is there. There's always something if price is just going to stop.
Connection.
And something just disconnected. Was that Rhythmic or my live account? Let's see. I check my logs. My live account just disconnected and reconnected. All right. You heard it? Yeah. Yeah, I think it's on where you guys hear my the sounds from my computer. Yeah, there's another 1 minute volume imbalance right there as well. Seeing there are somewhat like this one. I'm going to get rid of this one because it already traded through too many times, a bunch. There's this one here, so it should come back through. And there it is. Hit it. Like, it never runs too far away from it, just like I said yesterday. And if it does, then I use that as a target. No, it wouldn't have been through my mic, because nothing catches through my mic except for my voice. Like, even if I talk over here, you might not hear me. Like, you might not hear me if I get too far away from my mic. It doesn't pick up hardly anything. It doesn't pick up hardly anything. And the speakers are behind the mic. But it does capture all my... Like, if I had Facebook open and I was getting messages or something, then it'd pick it up through the system. Yeah, but not like you hear me right now. That's my point. And that's also because I'm to the side of the mic. Yes, Chris. I know you did. I'm saying, like, it's not exactly like the voice. If I was behind, look. Can you really hear me? If I talk like this, you might hear me a little bit. Oh, Chris. Mr. Chris is very, you're very combative this morning, I see. That explains it. This morning. Shadow. It's okay. We love you, Chris. I hate that you're not feeling well. Feel good, buddy. All right, so back through the opening bar, fair value gap. When in doubt, always blame the kids, Chris. Oh, man. Sorry to hear that, Chris. It's never fun seeing kids sick either. You know, like, because they're so helpless and there's not really much you can do. Oh, by the way, I missed this little imbalance. So there's some imbalances here in the 1 minute as well. Look at all these little imbalances. I didn't even notice because I wasn't really looking far back on the 1 minute chart here. But here we go. We inverted the opening bar fair value gap. This is where I said I'm the 50-50 with price trading back through that one. Like, I expect that. And here we go up. I expect this where did I show that on the 5 minute? Right up here. Right above this volume imbalance. Price to trade up there first. And see, we're going to invert these fair value gaps on the 5 minute. I'm looking at getting this fair value gap right here, which would actually be our first presented fair value gap. Yeah. This will be our first presented fair value gap right here. Inverting the opening bar fair value gap. We have a market structure shift. We drew down to a level and right about equilibrium of that entire range. So now what I can do, well, let's see. It's 9:45. Let me make sure. Let's see what happens here. Because if we come back down to this area, I may be thinking long already. Depends what happens here. If we get a fair value gap right here, then I won't immediately long it. I'll wait till we come back into it. Because this one, I'm not fully expecting it to be a breakaway fair value gap, especially because it's the first presented one. But see, like now we have this one here. So I want to see how price reacts when it comes back into it, if it does. If I take this high, this low, right here would be equilibrium of this leg. We have another volume imbalance right below here. This is this little volume imbalance. So price could reach back down, wick here, and then close up. But let's see what happens right here. This is going to be a little key area, and then see if we come down a little bit more. It may not. But let's see. It's not 950 yet either. There we go. Reaching way down. Now, I'm going to wait. I'm not just going to hop in right away. Okay, it's looking good. See how the body's closing or potentially closing in the upper half of that fair value gap? This is where I should, I mean, it immediately reacted and went up from here. This is London's low also. I'm going to wait a little bit because it's not quite 950. I'm going to see if we're going to want to, because we have this volume imbalance right here still too. So I want to see if we want to reach a little further down first. Or if it's not quite ready to just keep displacing up. The midpoint of this wick, there we go, we're passing that up. I'm going to go long. I kind of got in. It should not come back below here, but this may just run away.
Order submitted.
Because this is holding up here. It shouldn't come back below this swing. It already hit the first presented fair value gap. I got in pretty high, but I really expect this to run up here. Should not come back below this.
Order submitted.
I really don't want to see it come back and touch it again, but we'll see. We still have that volume imbalance down here. That's the only thing. But if this is going to be, since this got traded back to and immediately reacted by going up, I don't think it'll come back for that volume imbalance. It might. If it does, then it's going to take me out. So that's a risk on this one. We'll see. Technically, my best stop would be under this wick right here, because that created this fair value gap. And I want to see price take this swing now, right here. And I want to see this midpoint of this wick hold up still. Yeah, look at that. It might want to come for this volume imbalance. And I should be under this. Yeah, I should be under this swing right here. I may have to risk a little more, because I should be under this swing right here, technically. Because this one created the fair value gap. Actually, no. This one created the fair value gap. But we'll see. So I have a little bit more of a risk than I like, but I'm very confident it's going to go up. I just hopefully it doesn't wick me out and then go up. It's 950 now. Like right here would have been the better entry. But
Connection.
oh great, it just disconnected again. It's not a good sign. So it took this swing. That's not a good sign either. It very may want to come down to this imbalance. So we'll see. I'm watching this swing now. I don't see a reason though for it right now to come back down any further than this. Because the structure, my framework is that it should come up here before, like it should not come back down below this. And if it does, because nothing's guaranteed, if it does, then just let me out. And give me the L. But I don't think it's going to lose, to be honest. Oh, you know what? And I never posted the link for today's giveaway. The last day of the giveaway. There we go. There's the link for today's free evaluation, the last day of the 5 days of evaluations, free evaluations. Pinned there. Let's see. We need to take one of these swing highs here. Or this swing high. So, I still believe in the structure that I'm seeing overall. But we'll see. Maybe a high resistance type of day. We'll see. Hopefully not. And the only thing on this one that I don't want to see happen is it want to come down right to this imbalance. Because it could overshoot and then go up. But like I said, if it breaks below this area, then I want out. Good morning, Tony. We have I just don't want it to wick down first. That's the only thing. This 15-minute, yeah, see, there we go, right to this imbalance. This 15-minute wick, look at that. It's a manipulation, potential manipulation wick. So let's see. I mean, I had to risk a little bit more than I normally like. Want to see it take this swing up here now. I just hope it doesn't wick down first, knock me out, and then go. Now that it hit this imbalance, I want to see a reaction off of it and go up. If that doesn't happen, then I might get taken out, and at that point, just let me out, and I'll have to take that loss. I'm going to have a little bigger of a loss today than normal as well. This is about a 41-point stop. It's pretty big. So I didn't even get a chance to kind of size down. But we'll see. We'll see what happens. I still am very confident in this. Need this imbalance to hold, though. And then when we come up, if we do, and take this swing here, and this swing here, I want to see displacement up. So this would have been a really good entry right here at this imbalance. Kind of like yesterday. I was a little impatient yesterday. I got in a little early. Today, got in a little early. You can see I'm in some pretty nasty drawdown. I really want that displacement up through these swings here, though. That'd be really nice if we get that. Then I'd be a little more confident. Right now, yes, the volume balance is holding, but it probably should not be trading, like hanging out right here. So at this moment, I would say it's more of like a 50-50 probability on this one. Because it's doing what I thought, but it shouldn't really be hanging out. Like, we should take off. There's just too much buy side liquidity up there. I don't see a reason why it needs to go down any further. But hey, that's trading. And I'm always like, man, my personality, it's like, okay, win or lose, let's just do it. Let's go. Like, what are we going to do here? Come on. Win or lose, let's go. I don't mind losing. It's just the slow bleeding. The market likes to make it painful. And then, have y'all been in trades? I'm sure y'all have, where like you have a stop and price gets like right there, and it's like a couple ticks away, and it doesn't hit your stop. Then it goes away, and you're like, all right. And then it keeps coming back close. You're like, come, just knock me out already. So we're taking this swing. This is exactly what I want to see. But now I need to see price continue to displace and leave another fair value gap. Like, if it closes this here and loses momentum, then that's not a good thing. Like, that's not a good sign. Like, right now, we just need to displace and just go up there. The thing is, though, we have this opening range gap, consequent encroachment here, right here, the midpoint. It could hit this and, you know, hesitate or kind of give us a little turbulence, but we'll see. With 23 seconds, I want to see this. Like, I don't want to see price do kind of what it's doing now. It needs to leave us a fair value gap here, and we need to continue to displace. Because we took these little intermediate swings here, but I want to see this swing still taken right here. At what's this high right here? 054.75. I need to see that taken. We got this little fair value gap. That's good. But now price is touching, or if it does touching it, I want to see an immediate reaction for it to go up. Like now. Like, I don't want to see it hanging out here. I don't want to see it dig in too deep. I want to see it react and continue up. Technically, price should not come back below these swings here. So I could tighten up my stop to reduce my risk a little bit, since I do have a little bit larger of a stop than I normally like. Like right now, like price should have displaced up. So I'm not very confident in this trade. We'll see where this bar closes, but not very confident. Yeah, that too, Shadow. We'll see where it closes. I do want to see it close above the midpoint of this, but it's like right there, and look at that. I mean, it's not optimal. Look, see, it's looking pretty ugly. It may continue to go, but like here's an order block. But that's why I pulled up my stop, because at this point, if it reaches back below this low, just let me out, because it's gonna. Yeah, there we go. Because it's just gonna go down. Make sure everything's closed out. See, and I took a bigger loss than normal. Oh, come on. Needs to close my... I hate how rhythmic leaves what it looks like in order on your positions tab, even though it's not actually there. And it makes it look like you're still in an order. All right, so that's 3 days in a row that I've lost. It's the third time that happened this year. And yesterday was a little bit of a mistake. Today wasn't the best. In the market, it's not aligning quite with my framework either. So, now tomorrow I'm not trading. But so here's the thing. I need this position in Rhythmic to show closed, even though I know it's actually closed. I still need it to, because I hate whenever it shows a lagging position like that, because it makes it look like you're down a ton. Hold on 1 second. I'm going to have to disconnect from Rhythmic. There we go. Let me reconnect. But anyways, yeah. So see how it's coming down. It's going against my framework completely. So that's why I tightened up here. And it may keep coming down. Who knows? So with that, Rhythmic seems to be having issues. So with that, it's like what I was saying yesterday. I need to analyze, why did I have 3 losing days in a row? Is it the market? Is it me? Or is it both? And right now I think it's both. And so I'm not trading tomorrow. I'll be trading Thursday and Friday. And now that I have 3 losing days in a row as well, I'll be sizing down a little bit. So when I size down, I don't look to size down to recover. I look more so to size down a little bit to get back on that win, right? That winning streak. And I don't even say streak, but just like get back on the normal trajectory of my trading history. So I'll size down. I'll do that. And once I know, okay, I'm back, like mentally and market-wise, we're back. Once I do that, then I'll jump back up. Because the last thing you want to do is just continue doing without any changes at all, right? And so you need to make sure, you need to assess the situation. Like why are things happening? Always look for the reasons why. Why are things happening? And if you haven't quite figured it out, then, you know, maybe you shouldn't trade again until you figure it out. And then once you figure it out, size down to know you're correct in your assessment. And then you say, all right, cool. I was doing this, I fixed that. Or the market was this, it's now better. And then you take a couple trades with the lower sizing. And then once you are like, okay, cool, we're back, then you go back to normal sizing. That's typically what I do. So Thursday and Friday likely will be lower sizing, and then close out the year. And then when I come back January, depending on how Thursday and Friday went, I may be back to my normal sizing, or I'll continue a couple days with slightly less sizing, and then I'll pick back up. That's kind of how I do it. Would you play the inverted fair value gap now that it is underneath? You could. I personally still don't trade inversions, but yeah, you could. But see, here's where I'm still bullish though on the day, like overall, because I expected price, like I said earlier at the beginning of the stream, I expected price could reach down to this area, or even this area before going to that buy side. But what it did was it reached down to right here where we had a 5-minute fair value gap. We also had this 1 hour fair value gap right here. And because price reacted to it, and it did give a 1-minute market structure shift, gave displacement, gave everything that I like for an entry. So that told me this could have been enough of a draw for price to then head up, which obviously wasn't. But the reason I said this area initially, or this area, is because whenever I measure out this range from my sell side liquidity all the way up to this all-time high, because that's our recent high there, right here is equilibrium. So if we're reaching down, right here's equilibrium, right here is the first imbalance or inefficiency on the other side of equilibrium. And this is exactly where I said price could potentially draw to before heading up through that buy side. And now, like right here, we have a lot of engineered buy side liquidity. So, but sometimes it does overshoot, and if it overshoots, this would be where I would expect it. But I don't, from here to here, I don't expect it to go any lower before coming up and taking all this buy side liquidity. So That's a little bit tough one. A little bit tough one. Just because you can, like, I had the read, I had the idea, but since it presented itself right here, either way, could have waited because it was 950. Here was 950. And either way, this area would have been where I would have liked that long. Yeah. So today's trade, I actually don't think there's anything I would have done differently on any other day, to be honest. It would have been nice if the market would have traded down here first and then did this market structure shift and have a displacement and all that stuff, because that would have been even more confidence. Because see, here's equilibrium, nailing this 15-minute fair value gap, and look at the response off of that. See, now we're taking this swing with some displacement here. Now it might be ready to take off. So we'll see. Yeah, Ed, that's the first fair value gap after the 930 bar. So we have the 930 bar here, which I call that the opening bar fair value gap. Right here. Actually, I can get rid of that now. And then the first, so this right here was the first fair value gap after that 930 bar. And that kind of sets the standard for the day. Like if the market trades below it for the day or above it for the day, it's kind of just like a setting the stage. So here, it looks like where the actual trade would have been the best. Right here, we took this swing. We're leaving this fair value gap. Potentially get another. I would expect price to not trade below this anymore and go ahead and take the buy side liquidity. Yes, that's on the 1 minute chart. I kind of look at the same thing though on the 15-minute chart, where I look at the opening bar. Like this is the right here 930 opening bar. And if there's a fair value gap on that 930 opening bar, then I take it as a 50-50 gap. If it trades back to it, then 50-50, it could trade all the way through it. If it's that 930 opening bar. See here, I would actually like a long off of this fair value gap here to go long, back up, but I already took my trade, so I can't take it. And then we're inside, so we have a double gap right here. Right in there. Price should displace up if it's going to work the way it should. And I'm not concerned about these bearish fair value gaps here, because my overall structure and framework is telling me long. So I'm not worried about these. Yeah, it can cause a little hesitancy, but right here would be where I would have loved a long if I didn't take my trade already. See, let me put my executions on there. I already took that trade. So here's where I would have loved a long, and it should displace up if it's going to work out. But it might not. All right. Make sure y'all don't forget to enter in the drawing for today's giveaway. It's pinned in the chat. There it is again. Let's see. Looks like we have a little more. 30 something entered in the drawing today. 35 it looks like so far. So yeah, you see this big fair value gap right here. I really wouldn't be, let me get rid of these. Well, really wouldn't be worried about these. So like I said, there's too much buy side liquidity. The framework is there for me. One last kiss of this fair value gap and actually right where that volume imbalance was. Let's see if it takes off. It's hitting this volume imbalance here too. Look at that. And this is a bit of a mitigation. So it's a little bit tricky, I'm not going to lie, but my framework is telling me we should go up. We should go up. This may have not been the time. This may be the time. We'll see. I think I'm going to give it another, let's go to 10:15, and I'll close the entries for the giveaway. Today feels like a Friday for me. I don't know why. Feels like a Friday. I guess because I'm not trading tomorrow. Maybe that's why it feels like a Friday. See, reaching down into this lower portion here, and I don't think it like. See, it's not. I'm just. I could be wrong today. Like completely off. And don't forget, we do have Fed funds rate tomorrow afternoon. So, you know, the day before big news days, so like the day before tomorrow, Fed funds rate, the day before NFP, the day before CPI, those days are really the trickiest days to trade. They really are, because the markets are usually trying to set where it wants to be for the following day. And then the day leading up to that news, typically the market will be in a bit of a accumulation phase, so not doing much. So I know the day before CPI, the day before NFP, there's no trade days for me. And FOMC is a no trade day for me because the news is that afternoon. Typically the day before FOMC or Fed funds rate, it's typically not too bad. But we'll see. It's not doing what I thought it should do, or what my framework showed. So and I won't really know until later as well, because I have to keep watching, and this is why watching the charts are important. Because let's say it does trade down here or here and then go all the way up and take that buy side liquidity and does basically what I thought it does, but at a later time, maybe later in the morning or later this afternoon, then that's something I journal and write down to say, okay, well, my overall analysis was correct. My entry, my trade was not. Why is that? Was it because of market conditions due to the news coming out tomorrow that it gave me the framework but didn't work whenever I was ready to take the trade? Is that why? Or is it not? Is that completely off? Or does it not do what I framed out at all and I was completely wrong? Like, there's a lot of things you always got to analyze. And see, it's obviously respecting this equilibrium here. All right. We have about 10 seconds, and I'll start pulling names for the drawing. All right, I am pulling the list. I hope everybody got in. All right. That's weird. Looks like we have 35 of you. Okay, let me pull up my random number generator now. Got us all ready. Is anybody taking a trade today? Here we go. All right. Losses. Took one trade on gold today. One winner, one very, very small loss. Shorting the first fair value gap. Let me see. What first one? You shorted this one here? I guess this one would have been one. Okay, gotcha. Okay. Let's go. We have number 2. Hey, but either way, you made money. That's good. I didn't. Okay, we have numbers 2 through 36. There we go. All right, so we're going to do the drawing here. We're getting ready to click generate and see what random number it picks. Here we go. Look at that. 6. Who is 6? Corey. We have Corey. Congratulations on winning. Let me see if there's 2 Corys. Nope, there's only 1 Corey. So if your name is Corey, you won. You know who you are. Congratulations on that free evaluation. I'll email you the coupon code, and what you'll do is you'll go pick whatever size account from Apex Trader Funding, and when you go to checkout in the coupon code section, enter that coupon code. It'll be free for you, and get that thing passed, funded, and get paid. So you'll get that here shortly when we get off the stream. Yeah, see here, it is not, since it is trading through here, this wick right here, how it reached down, I would watch this wick right there, but it is already trading below the midpoint of that. So if it continues down, I'd wait to see, not wait, but I'd see if it trades here. So I'll be monitoring this throughout the day. But either way, like, let's say I didn't take any trade and I was waiting. And by the time it does, if it does continue to reach down there, it'll probably be past my trading time. But like right here, I would need, there's still 9 minutes. I would need this candle to close above the midpoint of this fair value gap for me to be confident, and then wait for the whole structure and everything. Wait for the shift, the displacement, all that good stuff that I normally wait for. All right, cool. I'll check that out here in a little bit. Shadow, yeah. But see, like, that's the thing too. Everybody wants to always win, right? I want to always win. But when you know your statistics and you have a plan, you know you don't have to always win. You just have to always win as much as your plan requires. So I know, like I said yesterday and all the other days, and people get too caught up, especially when they're watching people on YouTube and especially other people that are streaming on YouTube, get too caught up in making sure or not wanting there to ever be losses. Like if you're watching my channel or came here to watch any of my streams in hopes of just watching me win all the time, is not going to happen. You're going to watch me win, 2, 3, 4 times or whatever, and then you're going to see me lose. And sometimes I go every other day winning and losing. But like I said, my plan allows for that. If I literally won and lost every other day, or won every other day and lost it every other day, like I would be very profitable. And that's almost, I do a little better than that because like I said, I average about 60% win rate, and you never know how that 60% is going to come. You might lose 3 in a row. You might lose 2 in a row, and then you might win the next 8. Like you don't know how it's going to work out. So like people get caught up and they might see, and then the other people that do want to go on and just find the most profitable trader to try to copy them, like that doesn't work out either because of what I just said. So like, I think when you see on YouTube somebody only winning, I mean, that's cool. That's great. But you don't always know the full story. Let me just leave it at that. But yeah, so like I'll show you my December. It's not as of now. Actually, with this loss, I may not be in the green. Let's see. Yeah, I'm not going to be in the green with this loss. And you know what? Last December of last year, I was not green either. So let me see. Let me add this loss in. And today, like I said, I risked, because I had a larger stop, I took a bigger loss than normal as well. 10, 472, 96. Slightly. It's not like huge, but still. It's more. I should have, on that size stop loss, I should have reduced I normally would have reduced my contract sizing. But I was too distracted with Chris arguing with me this morning. I'm just kidding. So yeah, I'm negative for the month of December. It's not over yet. I have 2 more trading days, but still, it's not a good month. So let's bring this over here on my spreadsheet that I enter in. I just entered in my loss. So look at that. 4 wins, 6 losses. I'm 40% at the moment. 40%. So I have 2 more trading days. So I can end the month 50% at best. I do trade on Wednesdays. It's just tomorrow's Fed funds rate. And that's at 2 p.m. in the afternoon. So I don't trade the day of Fed funds rate. Yeah, and Shadow, the rule so when you have a second fair value gap like that, from what ICT said on his channel, I mean, you can do whatever you want, but he said he waits. So you have a choice, right? To take that second fair value gap and have a stop under the first one in case if it does want to reach down. But then, of course, you have a chance of taking, more heat on it and potentially a bigger loss, or waiting to see if it does reach down to the first one. And if it reaches to the first one and it comes back up to that second one, then get in. So that's what he mentions. Yeah. So anyways, yeah, I was showing December. Look at this. 40% right now. And this is, look, 3 losses in a row. This is where I have to make sure and analyze like a lot. Like what's going on? Is it the market? Is it me? It happens. So see, like even here, 2 wins, loss, win, loss, loss, win. And then now the 3. So it's like, is it the end of the year thing, end of the month thing, December, holidays? What's going on? Is it me? That's something I'm going to have to figure out. Last month, 62.5%. Same thing. Win, loss, win, loss, win, loss. See what I mean? Like, that's fine with the way I trade. And then win-win. So, like, that stuff happens. Month 6, right at 50%. See, here's that loss. Then I had a bunch of wins. And then 3 losses. And then alternating. So, like, it happens. But 52%. And then you're looking at the average win-loss ratio. September. August. 53. And then I think it was June and July were my best. See, here's 70% July. June, 76%. So it's always an average. It's always an average. And then, of course, adding more accounts and all that stuff. So my goal is to be, right now I have 8 months straight being in green, being in the profit for the month. So hopefully December, the last 2 trading days, if I get wins on those days, I'll end green as well. We'll see. We'll see. Yeah, I plan to share this. Because, look, see, there's some things here, and I kind of laid it all out for a year, is how I laid it out for. And actually, I have on the overview here. Let me take a screenshot, but there's some information like my PA numbers and different things that I want to show on this overview. So I'll take a screenshot of it though, so I can blank it. But the overview puts everything together, and as an overview. But see, like if I go to month 9, there's still some adjustments because I've been kind of adjusting it as I've been going. So yeah, my plan is to get this all set and adjusted. That way I can share it. I just haven't done that. Just haven't had the time, and it's just been kind of been getting updated each month. Yeah, so let me see if real quick here if I can grab the overview. And actually, because I have on the data sheet side, it's really cool because I have it right here on this data sheet tab where I just go to my Rhythmic and I have my Rhythmic set in a way where I can just literally select all, copy, and paste right in the data sheet, and it takes all my account balances, drawdowns, and everything and puts it on the overview so I know where everything is. It says, you know, if I qualify for payouts yet on those or not or whatever. Tracks my trading days, all that good stuff. So let's see here. Let me get a little screenshot of this real quick so I can show it. So I'm not going to show all my balances. So yeah, so here's the overview tab. I just don't want to show the account number, but you can see my PA numbers here. That way you can see that they don't change. Like I could pull them up on the ATF, Apex Trader Funding's site, and you'll see that these all match. And so what it'll do is like this, I don't adjust anything on this page. I just put it in that data, just copy and paste it, you know, literally control C or control C, control V, copy, paste, done. And then all this updates the trading days. Have I met profit amount? How many payouts I have? My drawdown available? How much profits all in there? Then this is the total for everything up here. So right now I'm at 98 trades since March on all these accounts. Because one a day, right? Average 57%. So like I said, I stay around 58 to 60 usually. It's dropping a little bit. My profit factor is good. So this is like the overview that I really want to keep tabs on. Of course, how much I've taken out. So yeah, then the equity curve, as you can see right now, my equity curve, first time I'm down. So I'll see if I can pick that up back up before the end of the year. So, yep, that's about it. That's about it. It's 10:30, so that's the time for me to end the stream. And I'm going to continue monitoring, making adjustments. I recommend everybody do that. That way you can stay profitable or get profitable if you're not. And again, I won't be here tomorrow, so I'll be here Thursday and Friday. And yeah, I hope everybody has a great rest of their day. And if you are still trading, as always, trade well. I'll see y'all later. Have a good one.